edition of the Daily Market Commentary. It is Friday as we're rounding out our week. Friday, the 22nd of June, as we are officially heading into the summer solstice is behind us. So we are kicking it old school, as they say. If you're new to the channel, do me a favor, click that subscribe button down below so that you get the updates as they become available. If you've been on the channel before and you find something you like, drop me a like, drop me a comment. That helps the magical algorithm that is YouTube be able to find us and for the videos to be a bit more searchable. For those of you new to the channel, we look at the same 10 to 12 futures markets every day, leaving the lines on the charts so that you can see how trades develop over time from an educational perspective. So let's go ahead and dive right in. S&P, yesterday we had a bit of a pullback coming down off of this level here. You know, yesterday we talked about missing some opportunities and missing some trades. Today we have rallied back up. We've rallied back up about 12 points. We're coming into what could be a bit of a reversal area. So if we, we could reverse right in through here. We are coming to a potential reversal at this exact moment. It's easier to see on the NQ. Now, really quickly on this NQ, I had a potential reversal here on the NQ, but we put it in as a dashed line. Here's why we use dashed line trades. That means that price blew right through the level, so we should not have gotten filled. And this right here is what I like to call getting nicked by a tick. Just barely not getting filled on the NQ long level, missing it by 7. It got as low. Let's see, our low on this candlestick was 72.22, and our entry was at 72.19 half. So missing it by not a tick, missed it by 1.5 points on getting filled. But we are at a potential reversal point here. This is actually a pretty common price pattern for those of you that are Fibonacci fans. We've got a little bit of a pullback through here that could make this for a bit of a pullback, and I think we could come back down into here, and then we may get a rally. So I'm going to leave my level here. I think this level's still valid. I also think this could be a good opportunity to go candle to candle short on this area. Now, I'm not a huge fan of shorting this close to the all-time high. Note that every time you short near an all-time high, you're taking more risk. But if you do go in a candle-to-candle style right now, and so I'll hopefully get this video out pretty quickly so that you can see it, you would be in the position short with a stop just above this candle's high, right? And this style of a candlestick with that high upper wick would kind of help me to it. So if you get this, if you're watching this a bit later, you're probably not going to be short immediately. You may want to short once you get a candle with a lower low, and maybe even below this 72.60 area. So let's see when we get this thing out. Now, you may not get a big move out of it. It may not go all the way down to 72.19, but possibly down to 72.45 or so, and pick up about 15 points in the Nasdaq if it does indeed come down. Now, there's also the possibility, though, the other way around, that the Nasdaq, I went the wrong way. There's also the possibility here that the Nasdaq does indeed continue to pop higher and break through. And if it breaks through, I think there's room for it to continue to move up. So I'd look at Nasdaq trades rather than S&P trades right now, because the Nasdaq is putting in more reliable levels, a little bit more reliable levels that I think you can lean on a little bit greater. Gold and oil. So let's go first to gold. So gold, we talked about a potential breakdown below this this area in here if you were so inclined to do so, and it popped up from that area. I'm still going to leave this in here as I think this could be a good opportunity to get short as price comes down below it. Oil, we've come to our reversal point, and we've started to move off of that reversal point. It's not made a huge move off that reversal point. It's really just kind of meandered its way down. So if you are short from this reversal, then you want to manage your stops fairly tightly, simply because we're not getting a great reaction out of it. Now, that being said, this was the overnight hours, and typically those reactions are going to be better once the market opens up. So just be aware of it. The other thing I would also be conscious of is that if we don't fall from here, then this could be a chance to get long on a move up into this region. So I think there's two potential trades here in crude oil. Mind you, we're still in between our bigger levels, but getting a bit of a reversal off of it right now. Next would be looking at the bonds. So our bond area, we still have our breakout in our bonds below this blue line. We're nowhere near there. I've really just held off on trading bonds for a while because we've just been in choppity chop land. There's not a whole lot of reversal opportunities in here. I don't want to try to fight against the tide, and the tide right now is telling me it's going nowhere. So I'm not really trying to outthink it. The Aussie, we had a strong move up, and that's why yesterday on the video I talked about take your stop, lock in some profits, because we had a short off of this area, and we locked in the profits, and then it popped back up, which is why we removed the level. Didn't think it was going to be valid anymore today, and that is indeed the case. This is a true double bottom, right? In a true double bottom, you're going to have a one side lower than the other, and this would be the picture of a double bottom price pattern. So for those of you that do use price patterns, right? The old school Thomas Bulkowski price patterns, if anybody remembers reading the price patterns, it's supposed to be a measured move, right? And the measured move on a double bottom would be taking it up to here on the breakout above. Now, that would mean, and the whole reason I'm doing this is not to take the long now, because I think you've probably missed out on it, but that takes us, when I do the measured move. Now, do I believe always in these measured moves? No, not always. But that would take us right back to this area here, which could be a strong reversal, right? So I went through that whole price pattern analysis to show you that there's going to be enough price pattern style traders, algorithmic style traders, that may take it up to this area. So if you're long, I think you can still stay long, but then we may get a reversal up in this area. I'm going to change this to a dashed line because we want to see what it looks like at the arrival. But this could be a decent reversal point for the Aussie. The euro. So the euro, we had a little short baked in right here. We did get a little touch and go off of the euro level. We got a second bite at the apple, and the third time it blew through. That was in the overnight hours. So let me know in the comment section below if you're able to catch this this little tiny one where we had our touch and go. And remember, it's in purple, so that was found on a 15-minute chart. So on the 15-minute chart, price came right into the area and then came right back to our opposing fair price value area. So moved down for a nice little 3-to-1 reward to risk. So it's continuing its march higher right now. So if I slide this back to the hourly chart, what we're looking for is any decent reversal opportunities. We may get one back down into here. Not a huge fan of this time of day that this was created, though. Between 5 p.m. and 11 p.m. Eastern time is not the greatest for reversal trades. So I'm going to hold off on it just a little bit for now. Canadian dollar. The breakdown below our blue line is continuing to move, although it's starting to gain some strength. So my guess is most of us are going to take some stops and maybe take some money off the table. I don't have anything in here that I'm in love with as far as potential reversal. But, the Canadian dollar is going up. It's getting high. Get it? Since Canada just approved cannabis, it's getting high. You're welcome, America, and everywhere else that's listening. My jokes are terrible. The Canadian dollar is getting a little bit more power behind it, just in the last on the hourly chart. But we had talked yesterday about how there is this little bit of sideways price action here that you may be able to lean on, and that's really what may cause it to kind of come back up just a bit. I'm still not willing to take a long on it because I'm looking way too far back. And this is a good opportunity, maybe somewhere in here for a reversal if it comes back up into that region. Looking next, Great British Pound, Japanese Yen. So the Great British Pound, we had a huge run up yesterday, very, very strong move. No levels were in place on that. as we had taken out our levels coming into that region. I'm going to put a little level right down here because I think we could get a reversal off of this area here if we get a deep enough pullback into this region. It was acting as resistance in the past. A little bit of a pullback into here could give you a shot at the British pound from there. Japanese yen, our level is still way the heck up there, but I am going to put this one in play. I think we're getting close enough to start to look at this area here for a reversal trade coming up into this region. This area up here makes for a decent reversal. Copper, a lot of just sideways price action, not a whole lot happening there. And then nat gas, our level exists down below here. You know, nat gas, you could lean on this area up in here. Once again, not great as far as our time of day that it was created and the day that it was created, but it is still have some validity to it. Let's take a look using our viewer request at soy. And so in soy, we had a level identified a couple of weeks ago, or I guess earlier in the week. We did get a retest back into that level. It smoked down out of it, and now we've come back through it, so we've got to remove this one. And what I look at now is that we are definitely, we're definitely doing this pattern. And anytime I see this pattern, it makes my head kind of perk up a little bit, where I've got lower highs, but roughly the same lows. Now, the reason that I do that, let me zoom out a little bit and show you on the 4-hour chart that same pattern, well, very similar pattern right in here. And that's what precipitated this strong breakdown. So it looks like we could be getting another setup like that on the hourly chart right in through here. So for those of you that are breakdown style traders, this could give you an opportunity. Now remember, these triangles don't necessarily always have to break down. They could break either direction. But this is technically a descending triangle pattern. 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. 5 touches is the descending triangle pattern, to make sure that you have that in place. Last one I want to look at for today, I don't look at this one every day, but I know a lot of people are trading it, is Bitcoin. And the reason I'm looking at Bitcoin, I had talked a couple of weeks ago about Bitcoin futures, falling off the map. We're getting below 6,000 here in Bitcoin as we are. This is putting in a triangle pattern. That's the pattern that we're seeing on the weekly chart. Is that pattern of continued weakness, lower swing highs, roughly the same swing lows. From here, where it stops, nobody knows. Now, I don't chart Bitcoin regularly. I'm not a huge Bitcoin trader. I'm actually not a Bitcoin trader at all. I know a number of people out there are. But I look at the Bitcoin a lot like some of the things that happened in the dot-com bubble, right? The dot-com bubble, things got completely out of whack, right? And the market then fell apart. Amazon came down to $1. Priceline came down to $1. I mean, they fell apart. They crashed, and people said, "Oh, it was a fluke. It's over." And that's when really the growth occurred. And I think Bitcoin and blockchain technology, this could all be very similar in shape. And so I'm not willing to give up on it. And this is kind of exactly what I expected to happen. I've been saying this for a really long time. I feel like if you caught it on the way up, great. I know a lot of people that caught it on the way up and got out while it was in the 16, 18, 20,000 mark. And now as it's coming back down, where's the chance to get back in? I don't have enough, insight, and certainly the futures chart's not going to give me enough insight to see that. Maybe I'll do a separate video one day where we take a look at it just from a for fun perspective. So that being said, it is coming into the weekend, so understand your risk tolerances and your rules on holding positions over a weekend. But thanks so much, everybody, for listening. If you've got any questions, please send me an email, chuck@iiefinancial.com. If you know anybody who's looking for a financial advisor or somebody who's going to help take care of them and look after their retirement accounts and big bucket monies, and they're not interested in trading like you may be, please feel free to send them my way. It would always be much appreciated. Thanks so much, everybody. Hope you have a